We are now looking at the era of the zero employee AI company. Pulsia this week raised 30 million at $250 million valuation, 0 employees, 9 agents.
So yes, AI will be an augmentation, an automation, an efficiency generator like other technologies before it, but we can't find evidence yet that AI is displacing masses of workers. The data just doesn't stack up. And what people are figuring out is that actually the models are really powerful, but they need a harness to tame them. And you can take, the best model from OpenAI or Anthropic, but you still need a lot of application layer on top, the harness, the context, the way you manage the model, kind of the memory, all these things for it to do what you want it to do. And that is an application.
Somewhere in this current cohort of the 15 to 20 AI native unicorns, one is going to blow up publicly by the end of next year, which is going to be a full-on 72-hour catastrophic collapse.
I think we're possibly thinking about this the wrong way. Instead of being busy of regulating new things, I would try and figure out where can we deregulate to let European businesses be more successful.
Hello and welcome to Upside, where every week we look behind the headlines affecting European venture. This week it's Mads and myself, and what are we talking about? Well, we've got the AI infrastructure winners. We can now look beyond GPUs. Some good and ugly on the European sovereignty in action front. A zero employee AI company raises 30 mil. Have a look at that. That sounds interesting. And the Pope weighs in on AI. Plus deals of the week, what to look out for in the week ahead, and some predictions.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
So, Mads, my good man, now we can banter. Now we're in. Now we do the prelim banterization that VCs do so well on their pods. What's cooking?
Well, I hear there's a new car out. Did you buy one yet?
Yeah, would you get one?
No. What were they thinking?
And listen, you're not a car dude anyway. I'm a car dude, and I'm upset. I'm upset. I think this is a reach too far, and you can justify it however you like. As in, Ferrari have got to go and push the boundaries, and maybe this is a new direction. But this is just looks like a disaster zone.
Do you feel it's sort of Jaguar disaster levels?
Yeah, I think this is monumental. I mean, obviously the shares slipped 75% somewhere in that bracket on the launch of the Luce, but I think it's terrible. I mean, I don't think you can style it out in any other way. What else happened this week? What we won't necessarily dig into. We actually will dig into some of this. I was looking at SpaceX postponing Starship, and I was just thinking, is this pre-IPO? Is there a reasoning for this? I don't know if you got any thoughts on the SpaceX postponement of Starship.
They cut the top end of the range from 2 trill to 1.8. I don't know whether demand is going soft, and they're like, well, the last thing we need now is a disaster.
Yeah,
you saw Blue Origin, right?
I know, it blew up last night. Yeah. It's the 29th. The recording is the Friday the 29th, and I think it blew up at 11:30 last night. Yeah.
Maybe they don't want one of those.
But this is to be expected. I mean, you need these failures now in the early things so that you can iron out all the kinks, is my 100% ignorant view of space launches.
You don't need one the day before the IPO.
No, and also my take is that unless they can get spaceship up, a spaceship is the linchpin, as in everything, all of the future launches at the size and scale that Elon needs to make the model work all rely on Starship, right? Is that a fair appraisal?
Yeah, I think so.
So it makes complete sense just to kind of have nothing to see here. We'll work out the kinks. Everything's going to be fine. But at the same time, they're still only on the last kind of training flights and the last worky outy bit. So maybe, I don't know, probably not a bad thing to do. Did you see that Gary Lineker, for those not in the UK, he's a famous UK footballer. He's launched a VC firm, which I thought was kind of nice, focusing on creatives. Did you see that? You're a football guy. Actually, he was a Spurs guy.
Yeah, I used to like him. I've sort of lost my taste.
Oh, okay. Is there a story behind the story?
Possibly, but not for the show.
Okay, I can see it in your face. The other thing that I saw was Kirkland and Ellis, who are the world's highest grossing law firm, they've put $500 million aside to build their own AI tech stack. So that's a big chunk of change to build their own AI. And maybe we'll dig into this in weeks to come, but is this going to be something that we'll see more of, more in-house, more local on-prem provision? In principle, do you think we're going to see more of that, or is this just PR noise? Where would you put this?
So here's what we're going to see. And we've talked about applications as where the rubber hits the road for years. And there was this furious debate about whether models are going to rule the world and applications are going to disappear into just some small sort of crud. It's basically just a database layer with an LLM on top, but that's going to replace all applications. And what people are figuring out is that actually the models are really powerful, but they need a harness to tame them. And you can take, the best model from OpenAI or Anthropic, but you still need a lot of application layer on top, the harness, the context, the way you manage the model, kind of the memory, all these things for it to do what you want it to do. And that is an application. And so what we will see going forward is, yes, we'll see a ton of vertical applications in lots of spaces that the frontier labs can't occupy themselves. And as we have always seen, we will see smart firms at the frontier investing in in-house technology. It's many years since many of the biggest investment banks ended up having more software developers than they had bankers, right? Because they figured out quickly that technology is really, really important to their business model. The lawyers are figuring that out as well now, and so they're piling in. So actually, I would say what's happening here is exactly what you would expect if you expect applications and the application layer to be really, really important for value creation.
I mean, $500 million is quite a big chunk of change.
It's meaningful. Yeah.
I mean, you don't know what is just getting the headlines and what the reality is. And also, I would assume that if you've got a bank of engineers building whatever in old school times, that would be a big chunk of change over a period of time as well. So
yeah, 100%. And you think about how
horses.
Productive developers are today. You can build a lot of software for 500 million.
Yeah. Well, see, I've got, my theory is, and we've kind of spoken about this before, is that we'll see a lot more on-prem and we'll see a lot more local provision to build out the actual application layer. I think this is going to be, I think we might see more of this. Would be, maybe I'll put that in one of my predictions of the week. Not today.
We'll talk about some of it today, right? We've got deals of the week and other stuff. Will definitely be a recurring theme.
Yeah. And last on my not to go into list, but I wanted to just throw it into your foray, is the Deal Room Ecosystem Report. I know you're not a report fan, but they've mapped out 325 cities. They call them ecosystems, but effectively it's 325 cities across the world, looking at investment, innovation, talent, and outcomes. I don't know if you pulled out any nuggets from this. I did see that London has regained the top spot from Paris after losing it in 24. Israel's slightly down. Most of the Chinese cities, apart from one, slightly down. Americans obviously still owning the roost. Did you see it for starters, and anything in there that you'd pull out, or?
No, I think anecdotally it confirms what we have seen on the ground, which is that London is really heaving right now. The volume of deals we're seeing, the quality of the teams, the activity is the highest it's ever been, and that's a good thing.
Yeah. I've seen a few LinkedIn Europe bashing articles this week comparing, for example, Anthropic's raise to European venture, and you kind of can't compare. They're not comparing oranges and oranges, and I think be interested to see how we take the applications and how Europe carves its own path in the world as these things settle in. And let's settle into what we are going to discuss on the docket, starting with, we've got some interesting AI infra stories this week. Now, for most of our discussions about AI, we've basically been looking at NVIDIA and all the GPU stories. Now, we've got 3-4 different infra stories, starting with memory. So let's just pick up on this one first. CapEx, it looks like, just to tee it up, it looks like CapEx is going wider into memory software and beyond. And starting on the memory side, we've had a couple of companies cross the trillion mark. Give us the insight into what's happening in memory, Mads. Let's start there.
It's super interesting how memory has suddenly become the hottest thing on the planet. And you're absolutely right. We saw Micron and SK Hynix cross the $1 trillion threshold this week. memory is one of those businesses where, for the history buffs will remember that Intel used to be a memory business. And they got out of memory in 1985 because memory was always a very low margin, highly cyclical, very capex intensive business. And so in the early 80s, Japanese suppliers like NEC and Hitachi and Toshiba, they crushed Intel on price. And Andy Grove basically said, listen, we've got to get out of this. And that's why they pivoted to CPUs. And then they had 30, 35 years of excellent results, being the world's dominant CPU maker. So that sort of saved them. For 40 years after getting out of memory, Andy Grove and Intel were right, because it was a famously cyclical business. It was boom and it was bust. And every time there was a boom, everybody would pile in and add capacity. And then when it was bust, all those people that added capacity during boom, they would die. So companies that were if you look back 25 years, come up with the major DRAM players, Toshiba, PowerChip, ProMOS, Nanya, Inotera, they're all gone. It was the same pattern every single time. And there were sort of three survivors left, three survivors standing. It was SK Hynix and Micron that are specialists, and then Samsung, which is just generally a powerhouse. Massive, yeah. They could do a lot of things and have a fabulous balance sheet. And then suddenly AI and GPUs happen. And this has been the absolutely nuts pattern we've seen over the last 2 years, because you've had a compounding growth in the demand for memory. First of all, GPUs are famously memory hungry. You need a lot of memory to run the big AI models, and that sits in the GPUs. And so you've seen an explosion in the shipment of GPUs. In 2024, there was 3.4 million units shipped. This year, we're looking at 8 to 9 million. So you've seen between a doubling and a tripling of the capacity, growing roughly 50% a year. But what's happening in the meantime is that as AI models have gotten bigger, the amount of memory you put on each GPU has also grown by about 80% a year. So you've had more units needing much more memory. And in a capacity-constrained industry, that's gone bananas. And
so any new players come in this time, Mads? Do you know?
None.
No.
It takes years to stand up this stuff.
Yeah.
And so what we've seen historically is that people pile in boom times, and then they go bust in bear times. And that's why nobody has really been adding new capacity, because it takes too long. And everybody is looking at this and thinking, even if we add capacity for the stuff that's in most demand right now, well, guess what? We're going to be at the next generation of memory 2 years from now, when that capacity
the Chinese
stood up.
might. I thought the Chinese, it might be something that, obviously they're looking to be like a properly self-contained sovereign nation. I thought we might see.
They have been hit by the HBM, kind of the high bandwidth memory shortage as much as anybody, because even if they can stand up and create GPUs, they've not been able to get access to the memory. So it's a gap that's been difficult to close. It's not going to close this year. It's probably not going to close next year, maybe not even in 2028. And so that's what we're seeing in these memory makers, and why their revenue is just going through the roof and margins are exploding in ways we've never seen before for memory. At the same time, something else has happened. The capacity discipline almost never held, as you said. Historically, someone always defected and said, okay, great, it's boom time. Let me add more capacity. That's why it was a dreadful business for 40 years. Now, today, you sort of have an agreement amongst the three that nobody is piling in big time. And there is a suspicion that the buyers of the memory, so the semiconductor, the chip, the GPU makers, they don't want there to be masses of new capacity built, because they're worried that the memory suppliers are just going to go bust in a few years. So you almost have a bit of a tacit agreement there. It's a super interesting pattern, and it seems like margins are going to be high in memory land for some time to come.
My theory, before I want to talk about Snowflake and Salesforce in a sec, but my theory is that we are going to not need the CapEx spend. I've said this before. We've had a bit of a tussle over it, but I don't think we're going to need the 100x growth in this whatever CapEx spend from whomever. We're going to need 5x, 3x, 5x, something like that we are currently seeing. But it feels like, obviously it makes sense for the RAM people and the memory people to not then, go crazy on supply. But I'm just wondering, in general, all of this CapEx stuff, all of the stuff that we're talking about in this segment, I mean, I can't see us needing this ad infinitum. Do you agree? Do you
No,
feel
that's a
fair?
truism. So look, that's a truism. I think as with memory, if you look at the wider world, every time you have a space that's hot, everybody piles in, everybody invests, and at some point you're going to overbuild. It's just human nature, right? You know, there's always going to be somebody who defects and invests more and wants to try and grab that marginal, a bit of capacity and a marginal bit of market share. And then the market turns or you reach a new plateau. So I think that happens for sure. You're saying we're not going to need 100 times more. I think that's fair. I mean, if we are thinking about hyperscalers now, if we just take those 700 billion of CapEx investment, I mean, they're not going to need 70 trillion, right? I mean, they're not going to need 100 times more than where they are. But even if it's 5 times or 10 times more, that's still a massive explosion from where we are today.
Yeah. No, listen, I was looking at the rough numbers. I put it in the 3 to 5 bucket, but I'm always a bit conservative about these things.
Look, back when this whole thing started, we were all talking about Pascal's wager. If you remember that, right? Kind of the whole idea of, am I praying to God? Does he exist? If he exists, it's good. And if he doesn't, it's not going to hurt me. So I might as well. And there's been a sense that for many of the hyperscalers, it was almost like a Pascal's wager. It's more important to do it and be in it than if the train does continue and you're not in it, you're dead.
Let's talk about Snowflake and Salesforce. So Snowflake popped 37%. Even Salesforce beat estimates. And this is how I'm positioning this as part of the broader kind of foray into CapEx and AI infra, the whole infra piece. So we're now looking at more hardware provision and more software provision. So everybody seems to be, all boats rising with the tide, or whatever the phrase goes. Tell us a little bit about what's happening on the software side.
Yeah, so we talked about Salesforce last week, kind of previewing that they had earnings coming up this week. And some of the things I said to watch out for is, is this a apocalypse redux? Is Agentforce actually growing? Or is there some misery hidden in the numbers? And I think it's kind of says apocalypse. If you look at Salesforce, they're down sort of 30% a year. They had a pretty good quarter, but the shares are still soft. And I think there is a sense that, look, there will be potentially a seat-based erosion, because the whole notion is agents, they don't buy licenses. And if we need fewer people to do work, we need fewer Salesforce licenses. Yeah. So the stock has gotten punished for that.
So that's a shift. I mean, effectively, they're pricing a shift in the model from SaaS to usage. Is that a fair analogy?
That's exactly right. And we have seen a growth of Agentforce, which is their new agentic solution. The headline says that Agentforce has grown 200% year on year, but headline revenue is at about $1 billion, which is still relatively modest in Salesforce terms. It's a much bigger company. Look, there are a lot of questions around that business and kind of how well it's going to do in the future. Yeah. Now, at the same time, over at Snowflake, we're seeing exactly the opposite story, because Snowflake, they've had a phenomenal revenue growth in their new product line called Coco. Now, what is Coco? It's Cortex Code, which is an agent data assistant that lives inside Snowflake. What does that mean? Well, it essentially means I've got Snowflake, which is a huge data repository, and Coco is effectively like a Claude Code, or kind of an AI I can use to ask questions of my Snowflake data warehouse in real time, and then it'll write all the SQL queries. It's not going to hallucinate. It'll produce, proper insights for me on the back of that. And again, this is back to where we spoke at the top of the segment about the value of applications. Coco runs on top of Opus from Anthropic, but it's not just Anthropic. It's not just the raw model. It's all the intelligence and the harness Snowflake is putting on top to make sure that it can go in, query the database and the data warehouse in the right way, not hallucinate any rows or columns, make sure that the data that comes back is actually, it's a proper answer, because it has to be deterministic. It can't hallucinate anything along the way. You query your data warehouse, you want to make sure that the answer you get is true. And so that's just been a resounding success. Revenue has already eclipsed $1 billion, and that's within a few months of launching it. The CFO there, Brian Robbins, he said that Coco has been the largest driver to the increase in the forecast of the year. So they're hugely bullish on AI's impact on the business, and the market is really liking it.
I've not heard of Coco. I'll have to have a play. Very quickly, I want to talk about the S&P rule changes. Now, index rules, and I know this is American and everyone needs to forgive me, but I think this is important. So index rules are super dry. They are not sexy until you realize how this is going to affect all the IPOs lining up in 2026. And this automatic buying piece for all the indices, mainly from retail. So the S&P is about to halve the seasoning period and waive profitability for mega caps. Sounds dull, bear with me. What does this mean for the IPOs coming up? I think this is going to be mega interesting for SpaceX specifically, but how would you break down why this is meaningful? And then maybe there is a European angle, I'm not so sure, but very quickly, the S&P rule change, what's cooking here?
And a massive part of the stock market is today traded passively by indices, either directly by robo trackers that just buy the index passively, or by other investors that are looking to track the index closely because they're measured on their ability to beat the index. And so the S&P 500 as an index is the world's most important index, and so many people are tracking it. And the way to track it, you can try and replicate it in other ways, but of course the only way really to track it is to buy the shares that are in the index. And so if I'm in the index, a lot of people have to buy my shares because I'm in the index, and the way to track the index is to buy the shares in the index. And therefore, if I'm not in the index today and I get to join the index, a lot of people that otherwise might not have bought my shares need to buy my shares. And that becomes automatic demand. And so what will happen is when companies, they get admitted to the S&P 500, there's a lot more demand and the share price go up. And reversely, if they get thrown out, well, there's a lot less demand and the share price goes down. And of course, if you are SpaceX and you're looking to IPO with a massive IPO and to kind of command that, $1.8 trillion market cap, if you have a lot of demand lined up from people that must buy your shares because you're part of the index, that's really valuable. And so that's what the whole discussion is about.
I was also quite keen to understand all the lockups. I haven't really dug into the S1 or any of the details around the SpaceX listing, but I'd be so fascinated to see what comes in, how that affects markets and pricing, and then what happens as lockups unlock and people sell and maneuver. I think it's going to be a very, very interesting year in 2026.
Yes, and will the pace of rapid pulling out of hats be able to keep up with the end of those lockup periods?
Yeah,
right. Because I mean, no, but listen, Colossus, right? I mean, you think back to the whole story about X and XAI, and how Musk obviously he stood up XAI and then merged it with X, and then merged that with SpaceX, and it was just seen as a big capex drain. But he built those two Colossus data centers, and he was just able to make a deal with Anthropic to sell spare capacity to them.
That's I think almost isn't it 3 data centers? Isn't he got 3?
It's just Colossus 2 and Colossus 1. Maybe there's a third one on the way. The important thing for the story is that he was able to do that deal, and that sort of doubled the revenue of SpaceX overnight because of something else he did over in X to stand up a data center he figured out he didn't need. So it's those rabbits that, where
selling the future, baby. Always selling the future. Yeah. FSD's coming. Don't you worry.
Well, it turned out the future became the current really quickly, right? Because this is real revenue that now is flowing in. Wow. So, and the question is, what other rapids are waiting that could grow revenue by 10, 20, 30 bill over the space of a short amount of time? And if he has those, well, things might look.
That's all right. We'll get SpaceX to buy all the Cybertrucks. We'll get Tesla to buy all the AI. So it's fine. We can just keep the whole circular trade circling.
Yeah, but that's not what happened here. If you think about it.
I'm being facetious. I'm being facetious.
Yeah, and that's fine. It's easy to do. It's easy to poke fun at all that stuff because it is a bit funny. But I think it's some of those rapids that we sometimes don't see coming that are there suddenly, and then they sort of change the game.
It just always feels a little bit of kind of post-rationalized nonsense to me when you look behind some of the dealings with Elon, and then all of a sudden he's a magician because he's managed to sell compute to Anthropic. I think it's not so much judgment personally, but then I'm a little bit down on the man for reasons that aren't always valid. Let's not go there because there's no point. I want to talk about very quickly Opus 4.8. It's out. It was out 2 days ago, I think. We were on the 29th, I think. Was it 28th? I thought it was 27th. Anyway, whenever. It's
yesterday.
It's a newbie on the block. Is it a thing? Is it a step change? Looking very, very quickly, some of the benchmarks and some of the measures. It looks like it's beaten 5.5, 3.1. They've teased Mythos as the next frontier model, but what's the scoop with 4.8?
Look, there's just a lot of excitement for the model. 4.7 got a bit of flack. The new model, people are saying you should just call it the Opus 5. It's that good. Some people are saying we still prefer, OpenAI's Codex, but the Anthropic model 4.8 is the best, and it's just fabulous. And people are generally really, really excited. The vibe checks are great. If we look at what's happened at the same time is they've closed this new raise, and they've now eclipsed OpenAI as the most valuable frontier lab. It's kind of a $965 billion valuation. So it's a nice headline to come out with that, come out with this new model at the same time. Run rate revenue looks like they might be at 50 billion run rate by the end of the quarter. And it'll be the first fully profitable quarter. And as I said last week, I think Anthropic it's incredible. I think it's the most important company in the world right now.
But who would have thought? I mean, it was only yesterday that OpenAI was the wonderkin. Yep. And it's just, who knows how things are going to leapfrog and think the world will change, but that just seems.
I think Anthropic is bringing the best out of OpenAI, and they are back and they're working it. And Codex is a great harness. And what we've seen is, so one of the things that's been discussed this week is who has got access to Mythos. When it came out, of course, U.S. government, large U.S. banks, UK as well. The AI Safety Institute was one of the early labs to get a test run of the model. UK banks have had access to, or are getting access to, Mythos to help proof their security. Not so much the EU, and of course that's been a huge discussion point. Sam Altman, on the other hand, has been quick to say, "Well, we will provide you with our
always the
cyber
opportunist."
Well, there you go.
Bless him.
So. But isn't that great that competition is keeping people honest? I think it's a great thing. And we'll talk a little bit about kind of European sovereignty, I think, is coming up. But we're touching a little bit on it here because obviously these frontier labs are structurally and systemically so important because the technology is so powerful. And what is a whole continent to do if it can't access the good stuff?
Yeah, we're going to go beyond talking about it in the sovereign sense. We're going to be talking about the Pope talking about it with an Anthropic rep. I think Chris was by his side, so there's a very European angle here. But let's talk about the sovereign piece right now, because there has been this week some articles and some news stories about European sovereignty. Not all good, but there's three. Let's start at the top of the list. So the Dutch government blocked an acquisition. They stopped the American IT giant Kyndryl from acquiring Solvinity. Now, they are a Dutch cloud provider that hosts their online identity platform. So it makes sense that there's been some concern around the purchase. But this is the first time that a European company, I think, correct me if I'm wrong, has cited the Cloud Act, which I'm pretty sure was a Trump enacted act, which is a US law enforcing US companies to comply with law enforcement requests for data, even if the information is stored abroad. So starting with the Dutch government, tell us a bit more about it and how it's important.
I think it's important for what it signifies. In and of itself, it's probably a relatively small deal. But I think what's interesting is that we're seeing a lot of sovereignty and Euro growth-focused things all collide this week. We had the Kyndryl debacle on Tuesday. And then Wednesday, we saw this kind of new EU tech sovereignty package, which says that this kind of sensitive cloud and AI developments should be done in such a way that US hyperscalers are, restricted from selling their services or European governments for stuff that's very sensitive. Right?
That's been delayed to June the 3rd, hasn't it? So I saw that was supposed to go through on the 27th of May. So 2 days ago at time of recording. I think it's been delayed for a week-ish, and I'm not quite sure where they're going to land. I don't know if you have any more insights in that, but we'll see.
Listen, maybe they'll kick it into the long grass, but I think that there is a trend right now that seems inexorable, that we will see a bit of a split, and we'll come back to what some of the issues around that are. I think I want to jump over to ASML because there was an op-ed earlier in May where some of the CEOs of the very large companies, ASML, Airbus, Ericsson, Nokia, SAP, Siemens, and Mistral, they all wrote about the issues we have, sort of saying, look, more than 3 years after the launch of ChatGPT. In Europe, we're still debating regulation, while others have shifted the focus to scaling AI in physical systems and robotics. And they say that we have to simplify rules, we have to reform M&A, we have to just make it much easier to get stuff done. And there's a specific story around ASML that people will know. It's probably the most important European company. They can't expand their facilities right now in Eindhoven in the Netherlands. They can't physically expand them. Why? Because of climate legislation. So there are rules around nitrogen emissions, and the rules are now today interpreted in such a way that if you are building new things in certain protected areas, and there are a lot of those in the Netherlands, either areas that are protected or next to areas that are protected, you have to prove.
I thought this was to protect the farmers, Mads. Wasn't there some kind of link? Or am I
There
fudging
is
this
a link to
somewhere?
the farmers, because when you run a farm, you have to use a lot of nitrogen for fertilizer.
Yeah.
And so the whole issue is that one of the ways for the Netherlands to show a reduction in nitrogen emissions is to reduce farming.
Right.
Because farming, in some sense, pollutes a lot. It uses a lot of nitrogen. And so there's a lot of pressure on the farmers to stop farming so that the Netherlands can grow as an economy and build new businesses and do things that a country needs to do. And the farmers, of course, they hate that. So what we've come into now is a situation where in the Netherlands, you're basically forced to choose between the farmers and letting Europe's most important company expand and build facilities. And it seems bonkers that we can't find a better way. But that's where we've ended up. And of course, ASML, they're furious. They're like, we're capacity constrained. We need to expand so we can build the stuff.
He's
don't
been
have
vocal,
that.
isn't he? Christophe Fouquet, I don't know how you say his name. He's been quite vocal about this.
That's it. We don't have that many leading edge tech things that the whole world wants to buy. Here is one.
Yeah.
Now let it rip, right?
Yeah, I mean, I think you said it. Isn't the most important European company possibly ever right now? Is that fair?
Certainly right now. And so the fact they're constrained the way they are, so he's furious, and he's hired to build and scale that business, and we want him to, right? That's how we compete, is by making that business as successful as it can be. So put that in the context of some of these bans we're talking about here over the other side, the regulation. So on one hand, we're regulated in a way that means that the successful businesses can't expand. Okay, great. On the other hand, we are now regulating and banning U.S. suppliers. I think the challenge with that is, well, if we start banning U.S. suppliers, what will the U.S. do to European suppliers? Now, we have a vibrant tech sector. We spoke about it earlier. Phenomenal businesses being built. The last thing we need is for our European tech companies to be told that they can't sell to the U.S. So I think I think we're possibly thinking about this the wrong way. Instead of being busy of regulating new things, I would try and figure out where can we deregulate to let European businesses be more successful, and then rather than banning U.S. businesses, find a better way for us to trade and be partners. I just think we'll get a lot more out of it.
I think that was part of the fear of going all in on this new law that was posted for the 27th, the EU Tech Sovereignty law. I think there is also a fear of retaliation by the Americans. So I think there's a sense of my sense is there's a sense of sensitivity about how we're going to find the balancing act of staying sovereign, encouraging European provision, but not being slapped in the face by the Americans.
Self-preservation, yes.
Oh. We are now looking at the era of the zero-employee AI company. Polcia this week raised 30 million at $250 million valuation, 0 employees, 9 agents. Although it has a Trustpilot score of 2.1, which isn't great. If you want to know what it's all about, just spell Polcia backwards. That's Polsia backwards, if you want to work out what that spells. It's an interesting era that we're walking into. I dare say it will be slightly flash in the panny. Feels like a lot of crazy nonsense from Zerpy times 2021-22. I don't know if you remember the founder who walked into a pitch with a blank presentation and managed to raise $1 million. It feels a little bit like that. But what's happening at Polcia, and where would you take this one?
It feels overheated. When people are saying that the markets are crazy, I mean, it feels like a good example. As you say, Polcia, what does it mean? AI slop.
Yeah.
And right, and they're talking about raising at $250 million and 10 million of ARR, but I think when you break it down, it's less than 5 million of proper subscriptions, and then there's a bit of one-offs and some customer ad spend, and it feels like a not very high quality company. You pointed out the Trustpilot scores that are taking advantage of the times and are riding the wave. We are not in the deal. We didn't do the diligence. I'm sure the investors that have done it are very smart and have gone very deep in all of this. But when you look at it from a distance, it certainly looks a bit of a head scratcher.
Well, apparently all of the fundraising was done by AI as well. So I'm not sure what's true. I imagine that's nonsense. But can you imagine like doing your diligence and then being responded to by a bot and then getting your bot to respond to their bot? So what an interesting world we live in. This was another story that came out this week, which was the Bill Winters at Standard Chartered. He got caught. So just to backtrack a little bit, imagine working at a bank and hearing your CEO at a conference call you lower value human capital, which is effectively a version, should we say, of what was said. Standard Chartered is a UK-based global bank employing around 82,000 people, most of them in back office roles, and they are looking to be more efficient. So they're looking to cut staff. And I wanted to balance this with the UK news story this week about NEETs, which is not in education, employment, training. So the UK has hit 1 million people, 1 million NEETs. It's a 12-year high. So is AI to blame? It feels a bit AI washy. Where would you, are you a Bill Winters sympathizer or what? Where would you start with this one?
He probably needs to have a word with his PR team, or his PR team needs to have a word with him. It doesn't seem like it was that elegantly done. The truth is, companies have been investing in technology and used that to create efficiencies since time immemorial. They also have problems with performance management. We know, right? It's sort of steady as she goes. And then every few years they wake up and say, oh gosh, we actually haven't been very good at managing out on lower performers. And now we need to do a bigger thing, right? And then they'll do a reduction in force and they'll get rid of 5, 10, 15,000. And it feels like a bit of a tragic way to do it because it becomes like this huge thing as opposed to something that's more organic. But the truth is, Lloyds did a big riff in 2014. There was kind of 9,000 jobs cut on the back of a £1 billion digital investment. ING, they cut 7,000 in 2016. JP Morgan, they said they had kind of the new coin investment in 2017 that they said saved them 36,000 lawyer hours through automation. So, banks have been investing in automation forever, and now AI is just the latest thing.
And it's way pre-AI, right? This is
way pre-AI. This is just technology. But what will happen, of course, is you wake up and you're saying, look, there's efficiency, we can invest here, and then we can use that to reduce some heads. Okay, fine. Some of it is performance management. Some of it is automation. I think there's a mixture. We know that about 59% of hiring managers, they admit framing cuts as AI-driven because they feel it appeals to stakeholders. Goldman's is saying that it's actually very few jobs that are genuinely AI displaced. There was a really interesting study in the FT coming out this morning. John Burns Murdoch, who did it.
Yeah, you sent it to me.
Who sort of said, look, new studies are saying there is a very, very strong database evidence that the lack or the reduction in hiring of younger workers correlates with remote work as opposed to AI. And they've done both from terms of when did it start, how intense has it been, and what sectors does it correlate with in terms of sectors where remote work is easier and is used more, has seen a bigger reduction in the hiring of juniors. And the theory there is, look, when you hire juniors, they are, of course, super smart, but they don't know very much about how the business runs. And so they need a lot of training to make them productive. And a lot of that used to happen, organically in the office. But if everybody's remote, it's much harder and it doesn't work as well. And therefore, companies are not investing as much in hiring people for those roles. So, what's the truth there? We don't know yet necessarily. What we do know is that, and this is coming to your point about the NEETs, the not in education or in employment or training. And we have a lot of that in the UK now, sadly. A lot of young people, more than 1 million, are in that category. It's a 12-year high. 61% of them have never had a paid job. And what we also know is that a lot of that correlates with it has becoming a lot more expensive to hire young workers. The cost to hire somebody on the minimum wage, kind of an entry-level worker to a hospitality job or similar, has gone up over the last 6 years by 53%.
Yeah, not smart.
53%, right? And then we are surprised that businesses are not hiring more people. And, companies in hospitality and elsewhere are saying, we just can't afford it. It's just too expensive.
There's no
relative to the
joined up
value.
thinking, is there? I mean, there's no point. I don't want to go into bash, government bashing is pointless, but there's really no joined up thinking here.
The point is, it's very easy to then say AI, but it turns out
Which is a compounder, right? I mean, it is part of the challenge, and it will continue to be part of the challenge, but it's not all of it, you're saying.
Yeah, I actually think it's probably a pretty small proportion, because when you look at it, a lot of this started well before AI could have had any impact. And it correlates much better with other things like the cost of employing people, of remote work, and other aspects. So yes, AI will be an augmentation, an automation, an efficiency generator like other technologies before it. But we can't find evidence yet that AI is displacing masses of workers. The data just doesn't stack up.
Yeah. Interesting. Well, we're going to change gears from first to fifth here, from first into reverse. I don't think we've ever had a religious section before, but we're going to talk about the Pope. So on the 25th of May, the Pope published his AI encyclical, 42,000 words, titled Magnifica Humanitas. I'm sure I don't need to translate that. And it's exactly 135 years to the day after the Rerum Novarum, excuse my bad Latin. This was the church's response to the Industrial Revolution. I had to look all these things up. I had to look up encyclical. I had to look up Rerum Novarum, which in Latin translates roughly as of new things or of revolutionary change. It's a formal letter from the Pope to the bishops of the Catholic Church and then through to the world's Catholics. Think of it as a religious white paper, this 42,000 words. And in this case, it's the Vatican explicitly saying AI is the new industrial revolution. So the timings are very meaningful. And as I mentioned at the top of the show, Chris Olah from Anthropic was stood next to the Pope at the Vatican. Not OpenAI, not Google, not anyone else, but Chris from Anthropic, which I thought was very interesting. So, meaningful, what is it?
It's interesting because he's an atheist, right?
I didn't. Well, I always assume that many scientific-y, engineering-y kind of people are, but I didn't know that. I didn't know that he was.
I mean, I'm sure Anthropic could have found somebody in their sizable workforce
who's a Catholic.
There must be one, but they didn't send that person, right? They send that. So it's just, that was interesting.
I didn't see that. But Magnifica Humanitas. Tell us more. And tell us how this is going to be meaningful.
Well, I don't know how meaningful it will be. I mean, you gave a good background. I think it's interesting, and we'll see how important it ends up being. I think it's interesting, you say, because it was Anthropic that was there next to them, and it is a lab that's been stood up on being, we are the AI safety company, and it sort of seems in line with what they are saying. I think Anthropic was genuinely founded on AI safety. I think that part is real. But Daria, he's also turned out to be an exceptional PR man.
Yes.
And I think it surprises because he comes across as sort of a slightly distracted professor, right? When you see him and hear him.
AI is going to destroy your jobs. And then as soon as the IPO is, no, AI is not going to destroy your jobs. It's lovely. It's lovely watching the chopping and the changing. Yeah, very good PR.
He's really been able to capture the imagination with a lot of these things. Look, I have not read the Magnifica Humanitas. It's 42,000 words. Clearly, I don't know if they had Anthropic helping them. If Claude was helping to write it.
Look out for the M dashes. Yeah,
exactly. There were 6 principles. I think only one of them had real teeth, and they said no autonomous weapons. So there's the only thing that was sort of here is a concrete rule that you can measure and objectively say, here's something we endorse or not.
But does that have any teeth? I was looking at the Rerum Novarum 135 years ago, and it did have, and I'm assuming for all the reasons we can guess, it had a real impact in the real world around labor policy, for example, and how governments should work with their societies. It had a real impact. And I'm just wondering, does the Pope have that much purchase now? Would something like this have any meaningful impact in the world?
I think that's a good question. And let's try and separate the two things, because there is, of the principles, which of the principles have teeth? And then the second thing is, are people going to listen? Yeah. And of the six things, there's sort of like humans have dignity. I mean, there's some things that were very soft, right? Where it's like, okay, great, we can all agree on this. Whereas I'd say the one around weapons was there's a specific, we should ban autonomous weapons.
Yeah.
Right. It's a very concrete rule. Now, will it have any impact? Will people listen? I don't think so. I think it's dead on arrival, because the story, of course, is very simple. We can sort of think about this from a beautiful perspective of the theology and saying, look, the Pope has said we shouldn't have autonomous weapons. But guess what? If the other side does and we don't, that's probably not going to be so good for our people. And at the end of the day, the safety of our people should trump all these other nice considerations. And so therefore, I think it's just not going to have an impact. And I think that probably answers your second question.
Well, I mean, maybe we'll have some more religious segments on future shows, but it was very interesting to go religious on a Friday. I think I'm going to have a fish dinner, go to full Monty.
There you go. And we hadn't talked about Anthropic for 5 minutes, so
yeah, there you go. I think Anthropic's in every segment, and probably quite rightly so. I've got a prediction. I don't think you do, because I'm pretty sure you don't like giving predictions. But here's one. Here's a prediction from me, and see what you think. I like this. I like the predictions bit, because to me, this is just a thought experiment. This is a way of looking at what's going on in our world and just kind of putting something out there. I don't really care whether they come true or not. I love them as the thought experiments. But here's mine. Somewhere in this current cohort of the 15 to 20 AI native unicorns, one is going to blow up publicly by the end of next year, which is going to be a full-on 72-hour catastrophic collapse. And it's going to be in the sector. So it's going to be in the foundational model wrapper, where I believe the labs either already have a product or will soon ship a competitive product. So I reckon there's going to be a mega collapse, and it's going to be remembered almost .com-ish. Just this segment is going to be put in the .com-ish bracket. Yay, nay, punch me in the face.
Possibly. I don't know. I don't. My predictions, I think we make lots of them. I think we've just said that, I'm absolutely sure we're going to make autonomous weapons in the West. I can't see that we're not going to. Yeah. I'm absolutely sure that memory will become and will stay a very hot thing for this year and probably next year as well, just because of structural reasons. So
yeah,
I think we give
push the boat out, man. Let's go crazy.
Yeah. Well, listen, why?
Yeah, because I like it. I like the crazy. I know.
Go for it. Go for it.
No, listen. I'm gonna get more weird more weird and wide in my predictions as we go.
I don't know if we're gonna have a full-on 72-hour catastrophic collapse of a unicorn in the next 2 years, but why not? Like, companies live and die. That's at the end of the year,
I'm going to come back to all of these predictions and see how wildly off I was. Deal of the week. What's your deal of the week, my good man?
It is a company called Cognition. Cognition, they've just raised $1 billion at $26 billion.
Maybe this is one of them. I'd put this in the bucket.
I think let's talk about who they are and what they do, and why I don't think it will be one of them. Lux Capital, General Catalyst, some of the big names have led the new round. And what do? They make software for coding. Well, don't we have a lot of people doing that? Isn't that what you can get with Codex?
Yes.
Isn't that what you can get with Claude Code? Isn't that what everybody is after? And why does Devin need to exist? And it turns out that they're serving a very specific segment that isn't served very well by everybody else, and that's enterprise. Because when you code an enterprise, like when you or I use Claude Code to build stuff, it's a delightful experience. It's also a little bit freewheeling, and it's not very safe. And if I sit inside a regulated business in a bank, I need audit trails. I need permissions. I need a lot of scaffolding that Anthropic specifically have said they will not deliver to me. They are not going to deliver that. They're not doing all this audit stuff. But I need that. I need stuff that's certified for government use. I need stuff that is integrated with GovCloud. I need all the stuff with the long regulatory tail of difficult bits so that I can use it in my regulated environment. And that's why Devin, which is Cognition's product, today is used not just by banks like Goldman Sachs, that really like it, or by companies like Mercedes, but also by the US Army, the US Navy, the Treasury, the NASA Jet Propulsion Labs, and other companies that need stuff that's super safe and really works in that regulated environment. And I don't think that's going to go away at all. If
They're
anything,
growing at
I
a
think
clip,
that's
aren't
going
they,
to
as well?
be even more important. Pardon me?
Yeah, fair. They're growing at a clip, right?
They're growing
doing
at a
well.
fast clip, yeah. They're doing really well.
Yeah.
Incredible team.
Mine was EddyGrid. So EddyGrid is not quite the same scale as Cognition. They are a Dutch energy tech startup in Utrecht, cash flow positive, funded by existing investors, Graduate Ventures, and Volve Capital. They have a 500 plus megawatt under management platform, their largest independent energy optimizer in the Netherlands. And they raised 7.5 after a 900% growth spurt. So I'm only raising them because I absolutely love energy startups. I want to see more of them. If you're in energy doing clever stuff at early stages, please give me a ping. That is it. Anything in the week ahead? What have you got in your diary this week? Or what's coming up this week?
Just a couple of earnings announcements. So CrowdStrike is coming out. That's this big security bellwether for enterprise AI spend. We're expecting they will have a very solid quarter.
They're still around, CrowdStrike. I didn't know if they were going to be. I didn't know how after their last kind of fumble.
They had a fumble. They're very much around. I think they'll have a good quarter, but we'll see. They're going to announce. We also have Continuum. And we will have news around those guys. And so the question is, given the uncertainty around, how far out the some of the quantum revenue really is, not just sort of the quantum safe encryption, but actual quantum computing used in production, will the stock hold up?
Was Continuum one of the Trump 6 quantum businesses invested in by the US government, or grants applied to the? Was that one?
Possible. I don't know.
Well, listen, we'll look it up and we can chat about it next week if it's relevant. But there was a bunch of businesses given grants and the US government taken equity in. And there's been, I think it was a couple of bill push, which I thought was very interesting from the US government. And that's something we should talk about at some point. We've kind of touched on it, but how much should government get involved in either public or private markets? Be an interesting debate, I think. Yeah. Right. Anything more before we go? Anything exciting for you personally this week? Any travels? You in London? What are you doing?
It's my birthday.
What? Next week, isn't it? Are you on the 4th?
I am.
Yeah. 21 again. What are you going to do for your 21st?
What do all 21-year-olds do?
Well, they don't drink anymore. They drink, spring water and eat mung beans, as far as I can tell, with our lot, which is not the rite of passage that I had as a young man. But we won't go into that.
I think I'll have 5 beautiful young women for my birthday dinner.
Okay, you probably need to explain that before we leave.
My wife and my 4 amazing daughters, of course.
There you go. Cleanly explained. Lovely to chat, Mads. Thank you all for listening, and we will catch you next week.
Pleasure as always. Have a good one.
Upside.